Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. Happy to be back with you again today. I'm your host, Dr. Alan. I know you'll enjoy today's show, and I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. To leave a review and a rating, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either site, search for Real Estate Investing Abundance. Once you find us, leave both a review and a rating. Subscriptions are also vital to the show's success, so please be sure to subscribe on your favorite podcast app. It's free to subscribe, and you can unsubscribe at any time. Hello, enlightened investors. Delighted to be back with you today. I'm your host, Dr. Alan. If this is your first time tuning in, I know you'll find great value in the show today, and I offer a special invitation to you to head over to stevetucker.com and enroll in our Enlightened Investor Circle. There you'll receive support for your passive real estate investing goals, no matter what your level of experience or expertise. With today's guest, we will learn what it means to burn the ships, max out our credit cards, and discover the road to acquiring over 1,300 units in 18 months. Our guest has participated as a key principal in over $75 million in multifamily acquisitions and 12 residential developments. He began his career with Ernst & Young in their transaction real estate practice and is a licensed CPA. In 2018, he joined with experienced partners to directly serve enlightened investors like you who are seeking passive streams of income to develop financial independence for time freedom to live abundantly. Welcome to the show, William Walker. William, before we delve into the business of multifamily real estate investing, share with us a memorable experience from your formative years that helped you to be the person you are today.
Thanks, Alan. Appreciate coming on the show. A couple of things I would say, early on, starting work from an early age, cutting grass and washing cars for a family business. That was definitely memorable and helped kind of set a strong work ethic and some fundamentals. In 2014, went through a little bit of a family crisis and something that rattled a little bit of my support system, and navigating that set me on a different trajectory and created a little bit of a catalyst. And then different opportunities and mentors that I've worked with along the way, and things I've learned and the experiences I've gained have all helped shape ultimately where I am now and what I'm able to do.
Well, interesting. Well, William, we're going to get into that a little bit more as we go along here, but let's jump into real estate investing and tell us a little bit about your early influences and your humble roots and building strong work ethics. You mentioned that a little bit, but let's get into the details there.
I started working for a family-owned company. My family was in the car business, still is in the car business in Franklin, Tennessee, and started there in the summer times, cutting grass, washing cars. Remember growing up wanting a basketball goal and, basically being told you can, have a summer job to work for it. So I think that definitely set some strong fundamentals. Didn't really correlate into real estate or development, but at the time it was, building strong work ethic and character. And ultimately, I think helped me, persevere through some challenges later on in life because, I remember that hard labor work and starting early and just kind of conditioned me. But ultimately, I think what I've done and success in a lot of areas of life is stepping stones and building blocks. And if you don't start with the fundamentals and, kind of have that strong work ethic and ultimately have the attitude that I'm going to work hard at whatever I'm doing, you're probably not going to get that far. So it starts with the fundamentals, starts with, work ethic and building that from an early age. I was, blessed to have had an influence to start me early.
Well, a lot of guests that I have on the show talk about their why and how important it is to have a why. So tell us, what is your why and how did that lead you into the path that you have ultimately taken?
Yeah. So started working pretty early and got a taste for that, but, didn't really find a passion or, kind of that why until a little bit later on in life. And after most of my college career, but, in 2014, I mentioned earlier that we had a little bit of a family drama. My mom ran into some financial issues. She had to sell her house at the bottom of the market during 2008, 2009, not ideal times. She's a very loving person, probably someone that, if you're familiar with the love language, is a giver and likes to give. And maybe to the point overextends herself, but, giving to my sister and I, trying to create a lifestyle for us, but ultimately, wasn't able to sustain that. So, I saw a little bit of the support structure that I had grown up knowing and confiding in, needing support herself. And that, really ignited a fire under me. And I remember at the time I was trying to decide whether to go back to grad school for accounting. I had done 3 internships by that time, so I could have gone to work for those 3 companies and kind of start immediately, and was dealing with this. So that was a pivotal time in my life and kind of finding that why and, that hunger of, wow, I got to step up here and do something. And then just, having that strong work ethic. I always wanted to do something and be successful, try and create a good life for myself, but didn't know exactly how that would look. But that all kind of came together for me in 2014-ish, and knowing that, okay, I'm going after real estate.
Well, 2008 was a difficult time for a lot of people. And your mother was fortunate to be able to sell her house.
Absolutely.
A lot of people lost their homes to foreclosure.
Absolutely.
So there was at least that blessing that she was able to at least sell the property. Well, you also went through a period of time where you maxed out your credit cards. And I think at this time you were also consulting for Mid-America Apartments on a large transaction, a $20 million acquisition. Talk to us about those times and how is it and why did you end up maxing out your credit cards?
Yeah, this is a little bit of a clickbait thing, but it's true at the same time. So in 2015, I had just gotten done with grad school. I had bought in 2 rental properties at the time. So it kind of really educated myself on single family, set a goal for 100 single families and got to pretty quickly. I'm like, all right, this isn't going to work. At that time, I just transitioned into the transaction real estate practice in Atlanta, Georgia. And a good friend of mine named Tyler King recommended, a couple of weeks before I had made that switch and moved from Nashville to Atlanta, to go work for this group that was consulting Mid-America, who purchased 20,000 units from Post Properties, a big developer in 2016. We were working on helping value this company and got a really good education from that. But also on the kind of boots on the ground side and the credit card side was a coaching and a networking group. And I say it kind of lightheartedly about maxing out a credit card, and not that I'm condoning or encouraging anybody to do that, but ultimately I had, done a lot of education. I had gotten some experiences working in the corporate world. I'd been introduced to this networking and mastermind group that I was exploring as soon as I got down to Atlanta. And at the time, I had very little liquidity. I had 2 properties that I had scraped together, enough of a down payment to leverage and buy, and was getting decent cash flow, but didn't have a lot of fun. So I kind of made a bold decision to use the one credit card I had at the time. I think I had maybe a $15,000 limit on it. And I purchased a coaching course. It was a 3-month coaching networking group through REIA Mentor. Some of your listeners may be familiar, but ultimately made that decision for myself. And I don't recommend that for everybody, but I was in the position where I was kind of ready to burn the ships and I was going to make it work. And it ultimately got me around some great people and my partner today that I still work with. And I was able to pay that credit card off within probably about 12 months.
We'll be right back after a word from our sponsor. As an industry-leading, relationship-focused, design-build construction firm, Mosaic Construction has worked in many different asset classes from multifamily to retail, medical, industrial, and commercial. Mosaic Construction works to execute interior and exterior renovations with their team of trades and project managers. Their experience with value-add improvements has resulted in increased ROI and long-term value of the assets. They work nationally in partnership with local trades to deliver thoughtful, problem-solving construction management solutions to all their clients. For a personal, no-obligation consultation, call Ira Singer, 773-491-3145 or email Ira at mosaicconstruction.net. You can also find Ira on LinkedIn. That's quite an achievement, just paying off a $15,000 credit card in about 12 months. But you've had a number of achievements in your life, but you talk about burning the ships and taking a leap of faith. What was that all about?
When I had moved to Atlanta in the summer of 16, I originally started in Nashville with EY, and I started cold calling a real estate group in Atlanta, and ultimately got invited to interview and ultimately got a position with them. And a great group of guys. I had a great learning experience from them. It was a national based practice. We were focused on valuations, doing a lot of purchase price allocations for big multifamily acquisitions. I mentioned Mid-America Post. So got a really fast education on multifamily syndication and how these really large companies were doing it. And that was a great opportunity. And it was kind of a dream position for me at the time. I worked hard to get into it. They had not recruited from my university, kind of, self-taught myself the real estate acumen I needed to note in order to be prepared for, the conversations and the work that we would be doing. But, after joining that networking group and, after about a year of working within the real estate program, I got confidence, and I saw people doing it on the entrepreneur side and kind of the boots on the ground side. And I saw it on the institutional side. And, the numbers were much different. And Mid-America purchased post properties for a little over $3 billion. And some smaller investors were putting, together $1 million to $10 million deals. So it just seemed much more obtainable. And I ultimately left that corporate position and in pursuit of going out on my own and investing privately and putting together these syndications and growing a business for myself. But I couldn't go out half-heartedly. I had to, burn the ships figuratively and go all in. And it was right for me at the time. And I was lucky, or maybe lucky is not the right word, but at the time I didn't have a lot of people. I didn't have any other humans responsible, or wasn't responsible for any children. My family was able to take that risk solely on myself, but ultimately, decided to leave that path and pursue, a dream and a vision that I had. And it turned out well when I put, all my eggs in the basket. I focused. I went for it. Wasn't an easy road, but ultimately, that's what I was trying to capture by saying, burn the ships and having maxed out a card to kind of take a risk to join that group. But I think when you have a goal and you want to do something, if you focus all on it and you have that attitude that you're not willing to give up no matter what, death, I'm going to achieve this, or I'm going to die trying, then typically it's going to happen.
Well, I'm glad that it certainly turned out good for you there. Talk to us about your initial entry into the world of entrepreneurship. You had taken that leap. You stepped out of the corporate world and out of institutional real estate and into this world of entrepreneurship. So talk to us about that first step into it and those early transactions, and give us a little bit of background how you actually got into that.
Yeah, I remember my good friend, Stephen Bolton, who owns a moving company here in Nashville, showed up with a truck and came down to Atlanta. And I moved back into one of my rental properties where I had a number of close friends that were still renting from me. But it was an exciting time. It was a nerve-wracking time. I didn't have a lot of savings, didn't have a lot of resources, but I had a lot of hunger and determination. But what I began to do was just start networking anywhere and everywhere. And one of those places that was kind of a turning point and another coaching ground for me at the time was the Real Estate Investors of Nashville. And I met a guy there who was very instrumental at the time and was a successful real estate investor in Nashville named Philip Reichwalder. And he had put together a small investment group of Nashville investors that were buying in Chattanooga. Prices were inflating in Nashville, driving some of these investors to look for lower basis property in Chattanooga. And Philip and I had developed a relationship through an investor group that he led on Tuesday nights through this organization. And he had put together this group to go buy single family houses, 3, 4, 5 at a time, or as many as we could. So I began helping that group assess, underwrite, identify. We were talking to wholesalers, real estate agents. I was walking property, videoing, basically building packages for this group of investors. And we started buying single families in Chattanooga. That was my first kind of experience, and it wasn't necessarily straight into multifamily right where I had intended to go, but that was my path. And, something I would encourage other people to do. If you have a goal, as long as you're on a path where you can see your goal, on the way, I think, that's good, positive momentum. And, while I didn't, exit EY and raise, a ton of money and start buying apartments immediately, I started where I could, and I just took action wherever and whenever I could. But through that investment group, it was probably September, October of 2017. So I left Ernst & Young March of 2017. So six months or so after that, we identified a 16-unit property in Cleveland, Tennessee, which is not too far from Chattanooga. And a combo, two brothers in this investment group ended up putting this property under contract and purchasing the deal. So that was a win for me. I was able to share in some of those earnings as part of the consulting I was offering them and helping them underwrite, identify, and kind of do the financial due diligence on the front end of that transaction. But that gave me a lot of confidence to keep going. And I wasn't necessarily buying that or an owner in that deal, but I was getting closer. And those small progressions ultimately led me to where I am now.
We'll be right back after a word from our sponsor.
Would you ever invest all your money in a single stock? Very unlikely. Yet investors are willing to risk $50,000 to $100,000 in a single property in real estate all the time. Avestor is the world's first customizable real estate investment platform. Investors can build their own custom portfolio selecting investments across multiple asset classes such as single-family homes, multifamily, student housing, self-storage, and shopping centers. You can also invest across multiple markets and different time frames. Avestor also enables other real estate entrepreneurs and syndicators to build and use Avestor's infrastructure and cloud platform to create their own customizable real estate funds. To learn more, visit us at avestorinc.com. Avestor, real estate investing made simple.
Well, the way you're telling your story reminds me of what a number of our guests have always said, that there's always a way that you can find to partner with other real estate investors, but you have to do your own personal inventory and find out what it is that you can contribute to that partnership. And you were certainly putting to use your underwriting and analytic skills there to step into the real estate investing world in the way that you could do that. And so I'm sure that led to other things. Obviously, it did. So tell us, this was a consulting job that you did essentially, and you took part in the earnings because of that consulting. But you ultimately have gotten into becoming an actual partner in real estate syndications. So tell us about that first step into partnership and how that came about.
So, I slowly progressed from the Chattanooga group and started working with a guy that I went to college with in Nashville and some single family construction in Nashville. And I was helping to organize investors that wanted to partner with us. They had a background of construction and a GC license. We both went to school for accounting and had masters in accounting. So we were pulling resources together to build single family homes in Nashville. And we did a total of 4 developments, 8 houses total. They're called HPRs. So we would find old houses that were, abandoned or needed to be torn down or in bad shape. And we would redevelop that lot. And that led to some other opportunities. I went from that. I worked for Rod Cleef for a period of time and helped him with his acquisitions and in the early stages of when he was establishing his coaching program and some of the events that were happening pre-COVID. But I was just trying to provide value anywhere I could. I was networking. I was going to these events. I was talking to investors. But without giving too much background, I was in Sarasota, Florida. I was working actually with Rod at the time, and we were helping with acquisitions. But I think that the way that I transitioned was by starting small. People saw that I had good understanding and good underwriting skills. That was kind of my thing. I focused on my strengths, but I continued to network and keep my eye on kind of the apartment goal and look for opportunities where I could help people there. And one of the members that I had met back in 2016 when I was still working for EY at the RE Mentor group, who's now my partner. I would send her deals, and I offered to get her on a podcast at the time. So just any way I could to try and offer value to people that were in the business, and without really having much expectation, but also look and pursue deals myself and try and find opportunity to where if I found a great deal, I could go to some of these people that I'd been speaking with and providing value to and say, hey, I think this is a great deal. But that all kind of came together in February of 2018. And Maureen Miles, she's now my partner. I had met her in 2016. We started working together full time with another partner at the time. And fast forward, 4, 5, 6 months, we accelerated and got into our first deal. But real estate's a team sport. I didn't get into the larger deals and developments myself, and pretty much every deal other than 2 single families I bought for myself, I've had different people involved. So I think, especially when you're getting started, so much a team sport, and finding good people that match your strengths and that complement your strengths is crucial to scaling, to, building an organization that operates without, yourself. So I would say, a combination to bring this full circle of just education, experience, getting around the right people, adding value. And then, timing is a big thing. And, life has a way of rewarding those who are trying hard and showing up consistently. Some call it luck. Some call it being in the right place at the right time. But, when persistence and, when persistence meets opportunity, you're going to have good things happen.
Enlightened investors, will be right back after this important announcement. I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. So to leave a review, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either platform, search for Real Estate Investing Abundance. Once found, please leave a review and a rating. Subscriptions are also vital to our show's success, so please be sure to subscribe on your favorite podcast app. It is free to subscribe, and you can unsubscribe at any time. Can you tell us what that first acquisition was that you were actually involved in as a partner?
Yes. So in 2018, this was July of 18, I was living and working, focusing mostly in Atlanta, Georgia on apartment complexes. And the first large deal that I was a general partner on was Quail Ridge. It was 160 units. And bringing that up now, just to reference my numbers. So I found the deal through a relationship of mine. It was a debt broker with Berkadia. We had met through a networking event and had kept in touch over several months. I was sending him deals I was looking at. He was giving me guidance on loan pricing, but he called me up one day and said, hey, I just had an owner back out of this loan and isn't going to perform. Do you want me to plug you in with the broker? And I said, absolutely. So jumped all over that. And ultimately we ended up closing that deal. And that is, it was 160 units in Columbus, Georgia. We purchased it it was right around 62 a door, and we raised $4.2 million for that property. And that was a combination of down payment and the operating capital, CapEx. We still own that today.
What was the loan to value on that?
75%. And we got a loan through the loan broker who put me on it, with who was originating for Fannie Mae, long-term debt, 10 to 12 years, interest-only period, 75% leverage. And it's been an awesome deal.
So you got it at 62 a door. What is it valued at today?
So we just actually had an evaluation on it, and based on the market, we wouldn't really know it until a final sale, but we've got it valued a little over 100 a door.
Not bad, not bad. That's just in 2 years. Not quite double, but coming pretty close to that. You should be quite proud of that, and I'm sure you are. So you started with 162 doors in your first partnership, and within 18 months, you were involved in 1,389 doors. What a journey that must have been. So fill us in on some of the details in conjunction with that.
Yeah, so I started working with Maureen in 2018, and we still work together and operate jointly as Forum REI today. And all of the deals that I've done, we've done together. And we bought that first deal in July of 18. We purchased Alpine Apartments, which was a 58 unit, also in Columbus, Georgia, shortly after that. And I want to say November of 2018. So towards the end of the year. And I think kind of the law of the first deal, if you've heard of that, really took place. Maureen had some great momentum before we started working together with a different partner and company. And when we started working together, I fueled some of that momentum. But after closing Quail Ridge and Alpine in 2018, we closed 108 units in February of 19, Prosper Point. We closed shortly after that Overlook Crossing in Columbus, Georgia. That was 165 units. We went into Indiana, into a new market where we saw some opportunity in the summer-ish of 2019 and closed a 2-portfolio deal, Echo Square and Terra Trace. Echo is 107 units. Terra is 81 units. That same year, from a previous purchase, had a sale that Maureen was a sole owner on. And we purchased Columbus Crossing, which was an awesome, just unicorn deal, 165 units in Columbus, Georgia. And this was actually an REO situation. I had found this deal through a small broker in an off-market situation. And the lady who was running it and who owned it had inherited it 8 years prior from the owner. And she had worked for him as a property manager for like 25 years. So crazy situation, but, had my nose to the grind, was looking and everywhere we could for deals, underwriting everything, but came across this and, was able to ultimately purchase this directly from the owner before it went to receivership and was auctioned off, but got an amazing price. The lady was not able to qualify for a refinance. That's why she was kind of losing the property. And I don't know why she didn't, market it for sale earlier on, but she was able to make out with a good amount of money, much more than she would have if she had lost it. But that was an amazing deal, still in that as well. After that one, we closed a 3-property portfolio, again, and another one in Indiana. That was Red Bank, 88 doors, Woodbridge, 182 doors, and Buena Vista, 50 doors. And then the last one in 2019 to close out kind of that 1,300 unit run was a property in Columbus is 208 units. And this is from a gentleman that had built the property in 1986. He was still showing up to the office on a regular basis. It was 20% vacant, 80% occupied. It needed a lot of love and attention. He had fully depreciated it, fully paid it off, and just wasn't investing a lot of money back into the property. But that's been a heavier lift, but will be a great property as well. But that rounded out kind of that 18-month run or finalized that 18-month run in 2019. And I think that was just a combination of kind of a 3 to 4 year effort, a lot of the things that we discussed prior, and then matching up with the right partner who complemented my strengths and I complemented hers. We really had a great year in 2018.
Yes, a very impressive year indeed. Well, just real quickly here, could you just run us through a quick case study? Just pick out any one of those transactions and just take us through it real quickly here.
Yeah, sure. So one that is fresh on my mind is a property in Atlanta. And it's actually, this one's, we're negotiating a contract on. So let me maybe we've talked about some of the multifamily stuff. Maybe we can talk about some of the new construction stuff that I've been a part of and we are in right now and working on. So we have partnered with a good relationship, a builder that we have in Texas right now. And we are under development on a 288 unit complex near Brownsville, Texas. So on that property, we identified the land. We didn't have to do any new entitlement on it, but we did have to close the land. So we were able to organize a few investors with addition to Maureen and myself and the builder to close the land. We have recently just formed a fund in the syndication model to allow limited partner investors to participate in the construction of this. So right now we're working through our financing, just about have that completely wrapped up. We're working with a local bank on financing this project. So it's roughly $12 million for 144 units, or $24 million for the full development. So we're looking at roughly a $5 million raise for a down payment on a 20% cost. We'll be raising that from limited partners and are raising that as we speak. So those funds will be then matched with the bank's funds to begin construction. And that'll take about 16 months fully through that process. I'll be traveling to Texas a lot during that time to make sure that, I'm not leading any of the execution on the ground, but we like to stay close to our investments. It's a team effort. We're going to do everything we can to help and just stay on top of the project and make sure we're successful there. But that's a project I'm really excited about. And, Brownsville's a great little market with, I think, some good job growth that's just starting to emerge.
That is going to be a lot of travel between Nashville and Texas. And there's no direct flights from Nashville to Brownsville, I don't expect, are there?
No, I have to fly through Dallas. But luckily, we have a great construction director that's local guy, 25-year veteran builder in the local market. And he'll be our day-to-day lead. We'll just, if anything, I'll be going down to learn and absorb and try and stay out of the way. But it's exciting. Love the development side of the business. And as we've seen our more traditional value add side of the business, the margins, the yields, cap rates have all been shrinking over this last growth cycle. We're looking for opportunities that are still within our industry and our niche and our competitive advantage, but we don't make the market. We just have to operate within it.
Well, before we go into our last segment here, share with us how we can get in touch with you.
You can reach out to me through our website at www.4mrei.com. And you can also reach out to me via social media. I'm on LinkedIn. It's William Walker. I'm on Instagram as Will Walker _3. So all the social media platforms or email is a great way to get in touch. If you have any questions about investment opportunities or how we might be able to work together, or just want to talk a little multifamily, be happy to speak with anybody interested.
Well, great. And we'll have all that information in our show notes. Well, share with us one of your most difficult setbacks, and how did you come through that, and what did you learn from that experience?
One of my most difficult setbacks, there hasn't been one just major setback in my life where I really, was rock bottom, but I think it was just a culmination, maybe a little like surfing, you're excited, you got your board, weather's good, you're running out to catch a wave, and you think, I'm going to be catching all these waves and surfing. But really what it is, you're dragging 10-foot board through surf, trying not to drown and exhaust yourself to get to a point where you can even think about catching a wave. So kind of think about it in that way. And, it's been a culmination of just waves that, you gotta just work through and muscle through. And this business didn't come to me, and it didn't come easy. I kind of had to go out to it and, work through those waves. And it took me, a good 4 or 5 years of focused effort, and I'm nowhere close to where I want to be, but I'm so much further from where I started, and enjoying what I'm doing, enjoying the people I work with. And I'm excited about the future and where this will lead.
Well, for what in your life are you most grateful?
Oh, gratitude. My mom comes to light. That's a big influence in my life, kept me on the right track and good fundamentals early on. My partner, Maureen, has been a great mentor and influence in my life, and not only real estate, but personally. My friends and family, I'm grateful for the relationships I have and the opportunities that I've got to get up this country, the USA, good old USA. I think I'm grateful to be able to do what I do.
Well, share with us 3 good things you've experienced in the last 24 hours.
Number one is your podcast here. This has been a great experience with you, Alan, so appreciate that. Second great experience in the last 24 hours, putting me on the spot here, just waking up and being able to be in the real estate business. That's something to be grateful for, something I'm grateful for, because it wasn't something I've always had or grew up having. And then lastly, I'm about to get a permit that we've been working for on an awesome property we have in Nashville, Tennessee called The Warehouse on Music Row, 16th Avenue South. We're going to turn that into a really cool Airbnb short-term rental. And that'll be a great experience. And the email that I got letting us know we're just about there was a good experience in the last 24 hours.
Wonderful. Well, how are you putting your success as an investor and entrepreneur to work to create universal well-being for all beings?
Yeah. So, a lot of what guides me, I would say, in that realm, my faith in Christ and trying to be a good steward and treat people the right way and ultimately, do the right thing when nobody's looking and be a good example. And I can do that through real estate.
Yes, I'm glad that you're finding those things to do. So imagine that you've come to the end of your life, and as you lay on your deathbed, what do you look back on as your greatest joy and sense of fulfillment?
I think the impact that I've had on people, and when I lay to rest, and who are the people that I impacted, and hopefully I can say, or people can say that, wow, he had a great impact on a lot of people and a positive impact.
Well, wonderful. And I hope you have a long and prosperous life. Thank you so much, William, for being on the show. It has been a pleasure having you. And thank you for enlightening us with your expertise and experience.
Thank you so much, Alan.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.